Hello traders, it's Paul here with the next installment in the Blackwell Global Cryptocurrency Trading video series. Today we're going to look at Bitcoin in 2018. It's been an exciting 18 months for Bitcoin for both traders and investors, and what we'll do in this particular series is look at where we've come from and where we see Bitcoin in the next few coming months. But as always, let's start with a quick risk disclaimer. Forex and CFDs are leveraged products and involve a high level of risk and can result in the loss of all your invested capital. Therefore, Forex and CFDs may not be suitable for all investors. You should not risk more than you are prepared to lose. Before deciding to trade, please ensure you understand the risks involved and take into account your level of experience. Seek independent advice if necessary. So, ladies and gentlemen, let's have a chat about Bitcoin. We put this chart up here, a weekly chart of Bitcoin, just to give you a little bit of insight into the sort of almost seismic moves that we saw in Bitcoin in the latter half of 2017 and the first 5 or 6 months of 2018. It was quite an eventful year and in 2017, and hopefully you can understand and see from this chart that, you know, for the last 4 or 5 years, Bitcoin price had been effectively sort of, just working its way up and down in a small range. But from around about sort of April of 2017, we can see that we had real momentum behind Bitcoin. And invariably, it's during this period, let's call it this last sort of 12 to 14 months, that Bitcoin as a product, as a concept, has effectively come into the sort of, let's say, the modern everyday language. Many people might not know what Bitcoin is or what it actually does, but I can guarantee most people will have heard of it simply because of the sort of amazing sort of momentum that we saw within Bitcoin in the sort of latter half of 2017. You can see there yourself that we rose massively there from around about the sort of $1,500 mark up to a high of just under $20,000, and that was in a period of around about 8 months, and that was just quite unbelievable in terms of the move. We would look at that as a move that went almost like parabolic. It almost went vertical. But as any simple physics student would know, that by the laws of gravity, what goes up must come down, and that's what we saw in Bitcoin at the start of 2018. And invariably, we had for the last, certainly for the last sort of, I'd say 3 to 4 months of 2018, we had a rather sort of challenging bear market for some of the, let's say, Bitcoin investors. But with the whole idea of this series, the whole idea of this Blackwell Global series of interactive videos about cryptocurrency trading, if you are educated and understand the product, well, then you're in a position to trade the product in any direction on any time frame. And that's what we want to be able to impart, that education and insight to you traders, to be able to trade whatever product in any direction in any time frame in line with your own particular trading goals. So, as I said, that chart doesn't really help us that much in where we are today, other than to give us an insight of how far we've come, how high we flew, and how quickly we fell away. So let's have a little look at a few more charts around Bitcoin, and we can start to have an idea and a view of where we may be going forward. So, as we look here and we move down towards a daily chart, this maybe gives us a little bit more insight into, let's say, the moves of the last year. Once again, we can see that we had that stellar move there, really, in the sort of the second half of 2017, and it was really quite an exciting time for those people who had invested in Bitcoin in the earlier days, where almost price was making new highs on an almost weekly basis, the sign of a really very, very strong uptrend. But as we said, everything that goes up must come down, and invariably that's what we saw, sort of the creaks happening in sort of December of 2017, and then invariably that accelerating in the early part of 2018. And many people would look at that as, on the daily chart, that we operated down in a particular channel there as price sort of rallied up towards around about the sort of, let's say, 19,500 mark before falling away quite rapidly down towards the $6,000 area. And that has been a recurring theme within Bitcoin and many of the other altcoins that are being made available on the Blackwell Global MetaTrader 4 platform, is that we talk about in trading terms, talk about sort of big round numbers, big psychological numbers, and invariably they act as a magnet. And why does that work? Well, a lot of that works just because it's human nature. Human nature, we kind of round up the numbers. Traders can be a little bit lazy, okay? So they can instead of looking at what exactly the price action, they might just have an idea in mind to sort of buy at 6,000, get me out at 10,000. They just round it up to the nearest big numbers, the sort of the doubles and the treble zero numbers. But as a trader, as someone who has the ability to sort of analyze this market using some great, wonderful charts, well, then that in itself also provides us with opportunity. We're always looking for particular areas and levels of support and resistance. I think especially on the daily chart. The daily chart is where you have the most eyes looking at a chart. There are so many people, from private traders through to prop shop traders, through to hedge funds, through to institutions that are looking at charts of particular instruments on a daily time frame. And so those levels of support and resistance become key. Those areas of supply and demand, those particular, as I said, big round numbers, they all start to take on more prominence as we have more and more people looking at it. For me, when I look at that chart there, the daily chart, I look at that as a little bit of a scruffy head and shoulders pattern there that gave us a reversal pattern, and price fell away and moved. But more importantly, where are we now? Well, what we've had is, we had a sort of a bit of a rally there over the last couple of months down, having been down towards the 6,000-7,000 area. We rallied up to around about 10,000. What a surprise, as I said, 10,000 is a big round psychological number. We moved up towards it, and then, we bounced off that and, bounced down back towards about the 8,000 mark. And if you just think about that, even in the last 2 weeks or so, we've had a move down from sort of 10,000 to 8,000. That's a $2,000 move just in the scope of the last couple of weeks. And as I said, as you learn and understand the sort of the trading methods and the indicators and the trading strategies that Blackwell Global are providing to their customers for this new cryptocurrency range, well, that provides you with the opportunity to be able to sort of trade any of these cryptocurrencies in any direction on any time frame. Once you actually have an understanding and ability to analyze that market, to build a trading plan, and then invariably follow through with that plan. So, what we have here is, I've just gone down there to the 4-hour chart here for Bitcoin, and what I've done is I've just drawn in a few of those particular levels that we've seen, and with this we'll try and make this wonderful drawing tool work. What we can do is we'll just have a look here. We can actually just sort of draw in, as I said, I saw this as a little bit of a head and shoulders pattern. So I beg for your forgiveness. I'm a better trader than an artist. That is what I'm saying to myself. So what we're just showing here is, but the reality is we're just trying to look and identify a particular pattern. And what we had here was a left shoulder followed by a head followed by a right shoulder, and then we'd look at. It would be call it almost like a scruffy neckline, okay? A scruffy neckline around about the $13,000 level, and we can see that invariably, we broke that, okay, and then price, as I said, went down towards that sort of 6,000 level there, and you can see that's quite fascinating there in terms of the move we had. And that was just quite clear, quite almost like a classical technical analysis move. It's been one of the things that has surprised me and pleased me, is that the good classical technical analysis skills that have worked on equities, commodities, FX indices, etc., have worked very, very well on the cryptocurrency range. So if you have exposure, if you have understanding of those skills from, say, other asset classes, you'll find that they are equally valid on the cryptocurrency range. But, as I said, what I said, is, just drawing in some of these big round numbers is always key for us. We just talked about how, 10,000 is quite an interesting and important number. When we had the price sort of based around here, around about the $7,000 mark, before it actually sort of just traded its way up to 10,000, and then really, we've pushed down to around about 8,000, and then what we're going to look at in the next chart is just where are we now? What's the opportunity now? But I talk to all traders, regardless of what instrument you look at. Okay, regardless of what instrument you look at, that I think it's absolutely key for any trader to open up a chart, start at the monthly, then the weekly, and the daily, and the 4-hourly, and just go on and draw on those significant levels of support and resistance, because even with the advent of algo trading, the reality is that it's still a reflection of human psychology, and humans, we remember the history, we remember particular levels, we remember significant levels, and we remember how price reacted to them. And one of the good parts of having charts is that you can look back to find those areas of where price actually did have a reaction at particular areas of support and resistance, or supply and demand, and that becomes very, very useful ammunition to have when you're starting to build a plan for your particular trading skills. So here we have on Bitcoin on the 4-hour chart. But what I've done, ladies and gentlemen, is I've just zoomed in a little bit here. Okay, I'm just zoomed in. The charts are very simple that I'm using here for today. We have sort of black and white candles here, okay, as part of our trading move, and invariably what we've been seeing is that I talked about how price had effectively got up to just underneath 10,000 here. Okay, we can see this inside. Price had rallied up from around about 7,000 here on the 4-hour chart up to around about sort of 10,000. We put in a very nice 1, 2, 3 formation there, something that I particularly like to see for a reversal, and then price traded all the way back down to 8,000. Okay, back down to the 8,000 level here. All right. So as I said, remember we have those significant levels of big round psychological numbers. With that in mind, what I saw, as I was doing my own trade analysis, okay, over this weekend, is that having traded in a nice channel downwards, that was a very nice channel we had there. What we sort of started to form here was an inverse head and shoulders. Okay, here we have is that with the left shoulder here, our head here, then we have the right shoulder here, which is also just a little bit higher than the left shoulder, which classically is what we like to see for an inverse head and shoulder. Right shoulder, we want it to be. We want it to be a little bit higher. Why? Well, just think about it, ladies and gentlemen. What we're looking for is, this is a reversal pattern. We're looking for the market to change direction. We're looking for it to swing in the other direction. And by having a right shoulder that is higher than the left shoulder, well, it's telling us that we are now forming a significantly higher low after the ultimate low here for the head of the pattern. We had a neckline, a very clear neckline there, around about the sort of just in front of the 8,500 level, which we kind of broke out. So we've had a break of the trend line, okay, and then an inverse head and shoulders, and a break of the neckline itself. So this starts to become an interesting opportunity on the 4-hour chart to be a trader in line with perhaps the intermediate direction of Bitcoin will be. And what we found is, personally, what I found is that the 4-hour chart makes for some fascinating trading opportunities on Bitcoin and across a lot of the other old currencies. It also is very useful if as a trader you are, let's say trading around a day job, you're trading in a part-time basis, you're not able to trade on a full-time basis, you're not able to sort of check your charts constantly throughout the day, by just having to sort of watch when the 4-hour candle sort of forms. Well, that means that with the modern technology that's available, that you can just check into your charts every 4 hours for about 5-10 minutes. Just have a little look at what your existing trades are doing, have a look if there's anything else particularly setting up, and so it allows you to trade very easily with, as I said, only maybe checking into the charts 4 hours a day for sort of 10 to 20 minutes maximum, just to be able to manage your trades, place your trades, and actually just do your analysis as well. So take a little look at that. We'll see how that actually plays out over the next few weeks and sessions, as there'll be some fantastic opportunities for us here, and also elsewhere with Bitcoin. So, we've had a little look at some of those charts there, just to give us a little bit of understanding of where we are at the moment, where we're looking at, where is the opportunity right this moment, right today, at the sort of end of May, start of June. Well, but let's have a little look on a bigger picture in terms of, what do we have going for and against Bitcoin as, not only as a trading instrument, but actually also as as a vehicle, okay, as a vehicle. Well, as traders, and when we're aiming this primarily as at traders, for this particular series, rather than sort of investors, we're talking about people who are actively trading on Bitcoin and other cryptocurrencies. Let's have a little bit of a look about what are the pros and cons that we have for Bitcoin. Well, yep, in terms of our place for us, well, but Bitcoin is volatile and it does have many spikes. We've just seen there on the charts there over the last few months, we've had a fall from sort of around about 19,500 down to about 6,000. We've had a rally from around about 7,000 up to just underneath 10,000, followed by a drift down from around about 10,000 to 8,000. So, Bitcoin is volatile. Bitcoin has some great moves, and there are occasionally some spikes, as any kind of a immature market may experience. But of course, that provides us with advantage in terms of the high volatility. When other instruments may be moving very, very, very slowly, the opportunity to trade in the direction of the swings on Bitcoin provides us with an opportunity. In the long term, we are bullish on Bitcoin, and what we mean by that is, not just as a trade, but as a vehicle and as an instrument, and that we will see and expect Bitcoin to sort of rally towards those all-time highs over the next sort of 6 to 18 months. What people might be saying is that the sort of the move down we've had over the last 6 months is just a part of an extensive correction. It's almost sort of falling down, washing out some of the weak hands before the sort of major players reassert their positions, and we look to move to those sort of newer all-time highs. And one of the other elements we have is that large investors tend to prefer Bitcoin. It's not unsurprising that the cryptocurrency space has exploded over the last 18 months, and with the amount of ICOs, the initial coin offerings that we have seen, that invariably it's not a surprise that that kind of herd mentality kicks in, and that traders and investors tend to sort of focus on the top offerings, and invariably the top offering within cryptocurrency has been Bitcoin. As I said, even if there are people on the street who may not fully understand it, there's a good chance they may have heard it. All right, and that's our behavioral economics, just showing that herd mentality within all of us is still rampant. Okay, there is deemed to be safety in crowds, and certainly within large investors, who might be trading in larger positions, and so having to concern themselves about how easily they can get in and out of a particular market. Well, then Bitcoin provides them with that opportunity. So that was a little bit of a few elements that are for Bitcoin, but what have we got against Bitcoin? Well, it's not unusual that one of the things that has been the let's say the sort of the founding momentum behind cryptocurrencies is invariably a generation of people who watched how the great financial crash played out about 10 years ago, watched how banks and institutions were bailed out by governments, and saw how those particular institutions were effectively able to sort of carry on operating and carry on sort of with some less than ideal business practices, and there has been almost like a shift in sentiment towards being able to operate certainly in a financial manner in a sort of a decentralized way, whereby central banks and large banking institutions do not have that sort of element of control that they have at the moment. But not unsurprisingly, in the existing financial system, which is very profitable for banks and financial institutions, they are unlikely to sort of give that up without some sort of struggle, without some sort of fight. And it's not unsurprising that, governments, probably aided and lobbied by particularly large institutions, will look to have a form of control of crypto in the future. With the amount of money that is pouring into cryptocurrencies, it would be, it's not unsurprising that governments and large institutions will either want to sort of control them or will want to sort of take their slice of the pie. Okay, so we should be aware of that. We shouldn't be surprised if we see moves by particular governments to try and sort of exercise a degree of control over cryptos. And we have certainly seen that in some of the Asian countries. There has been moves towards that, and invariably that has effectively that has created threats and opportunities within in the overall markets. Yes, we did see the first signs of a bubble at the end of 2017. Certainly, price went really parabolic there, sort of November, December 2017. But as I said, is that what goes up must come down, and invariably what has happened is that's what we've seen. And so now the market gets ready to sort of reassert its new direction. As I said, it's probably wiped out a lot of the weaker hands within Bitcoin, and now we're the sort of those large institutions who have said they want to prefer Bitcoin. Well, then they may be looking to sort of reassert and reinvest their position. And also, just with this as a new asset class, a new market. Well, what we have seen historically is that the let's say the first movers very often are the ones that disappear first. If we look back 20 years or so to the beginning of the dot-com bubble. If you look at the sort of the names that were household names there in the dot-com markets, things like AOL, Napster, etc., they're no longer really around. They're no longer really operating. They were overtaken by the sort of later incumbents who were able to, let's say, be more agile and adaptable to a changing market. And so that is something that we have to just bear in mind, that Bitcoin is the big gorilla in the markets there, but there is also the opportunity that it may become extinct like the dinosaurs. If it fails to adapt to a very changing marketplace. So there we go. There we have a few pros and cons. Okay, around about what speaks for and against Bitcoin. Something for us to bear in mind as we operate within this particular instrument. So, then we have to look at, right, well, as a trader going forward, how do we make our analysis? What do we, what do we do? What do we rely upon, okay, to understand, is the, how do we come to a decision point about what we're going to do? I talk to traders all of the time about this, and, ultimately, as traders, we're just looking to answer a very simple question. Am I going to be a buyer? Am I going to be a seller? Or am I going to sit on the sidelines? It's, when it all comes down to it, we're just looking for a way to answer one of those three questions. And, human beings, and I include myself in this, we very often overcomplicate things, okay? We think, oh, well, it can't be that simple, can't be that easy. We need to add layers and layers of complexity. Whereas actually, for traders, it's very often, just a simple plan works best for us. So, with that in mind, we look at, well, how do we operate? How can we build this picture? Very often what we'll see is people will, be fundamental traders. Fundamental traders, excuse me, fundamental traders are looking at the actual underlying business, within that instrument. When it comes to Bitcoin, in terms of looking at fundamental analysis, that becomes a little bit of a challenge for us, because we're in new territory. We're in new territory, and Bitcoin is way out there ahead of everything in terms of its size and its scale and its scope. And we have to sort of understand how can we operate, understanding the fundamentals. there is no sort of balance sheet or income statement for Bitcoin as there would be for a major equity like Vodafone, okay, or just a let's say a normal major sort of bricks and mortar company. So in terms of identifying the fundamentals, it's quite difficult because there is also a good deal of misinformation that goes out there around about cryptocurrencies in general. So then we have to look at the technical, and the question is, well, is technical analysis applicable to Bitcoin and cryptocurrencies in general? And we touched upon it a little bit earlier. And personally, for me, I feel that technical analysis works very, very well on Bitcoin and the cryptocurrencies. And and that's very helpful. That's very supportive of the way I'm looking to do, because really, as I said, I'm just looking to make a decision. Am I a buyer? Am I a seller? Do I sit in my hands? That's it. And I'm just looking for an opportunity to be able to come to that conclusion. So when we look at technical analysis, what I try to emphasize to traders is that we start with a big picture mentality, and then we actually start to sort of move down through the time frames. So you heard me talk about it earlier, just that when I open up a chart on anything, okay, and it could be Vodafone, it could be Bitcoin, it could be euro against the dollar, it could be the DAX index. What I'm looking to do is to just basically do from big to small, all right? And what that means is I'm just looking at the biggest time frames, and then what I do is I work my way down, and I'm trying to identify those levels of support and resistance, those areas of supply and demand, those particular big round numbers that seem to have more validity than the others. Then within that, you're looking at those, you start to identify those structure levels, and what happens is we start to get interested as markets sort of start to move around those particular structure levels. What we can also find, as we've seen in Bitcoin, where there's been some really wonderful swings, on the sort of the 4-hour and daily charts, is that actually, channels start to present themselves, and with those channels, that gives us the opportunity to trade them as we would trade any other instrument. And then we have outbursts, and what am I defining as an outburst? Outburst is something that sort of really comes out of nowhere. A bit of a spike in price that may occur because of something that is happening in the world, or maybe something that is occurring in the, let's say, the cryptocurrency world, or a particular element that is relevant to Bitcoin. So we keep our eyes peeled for that. We try to watch out for that, and be aware, and that's why we actually look at the. We always look at managing risk, regardless of what we're trading. We're always looking to manage our risk. So I thought, what we do is just have a little look at those charts again and get a little idea. And what I also thought is, we'll look at that how Bitcoin has also had that impact upon some of the other cryptocurrencies. What many of the would call the altcoins, the alternative coins. We'll have a little look at that. Okay, look at them in terms of what we believe is possible, and sort of see how Bitcoin has influenced those other currencies. So, here we are back at the daily chart on Bitcoin. Okay, down on we've had a little look at this chart before. We can see that we had the swing up. You saw me sort of show the kind of head and shoulders pattern that we'd seen on the kind of the bigger chart, on the sort of daily 4-hourly chart, in terms of once we'd reached the top. But hopefully you can also start to see that there are particular levels or particular layers that we touched upon in terms of the big round numbers that have been relevant. So we talked about that 20,000, 17,000, 13,000, 10,000, 7,000, 6,000. They have all been relevant and interesting numbers. We're at around about 8,000 at the moment. Okay, just above it now. But those big round numbers are keen to keep an eye on. Especially at the kind of end of last year, when price was breaking through $1,000 numbers, okay, then invariably that was what was, let's say, almost like fueling the frenzy. People were experiencing FOMO, that fear of missing out. Greed was overtaking, and so once price broke 10,000, people were buying in. Once it broke 11,000, people were buying. Once it broke 12,000, people are buying in. So those particular areas and levels become really key, really important to us in terms of what we can see how the market reacts at those particular spaces. So, what we did here is, just drawing in just some particular levels, some particular trend lines, okay, and how we can start to identify and use that to build particular channels. It's just what we looked at is, just drawing a trend line from our top two peaks down. It actually hit our third peak, and then, we actually ran here just down here as it became almost like a supporting level. Okay, we can see that once again it came down and did what some traders would call kissing the trend line before it actually went sideways and then moved up to that 10,000 level. So, on the bigger picture, drawing in our horizontal levels of support and resistance, our horizontal areas of supply and demand are key, but also being able to draw in where we see particular important trend lines or particular channels that start to form. That becomes really interesting. That becomes really key to us in terms of what we're looking at. So, here we are as another level of interest for us, just drawing in those levels of particular levels of support and resistance. We can see here, okay, that, price bounced off this level, just sort of, just in front of 8,000, around about the 8,000 zone. We can see that price bounced around. We also had another bounce off, okay. Here it was resistance, then it became support. Price tried to push down here, okay, through it, but actually it came back up and really bounced off it. It was a real sort of, dead cat bounce that we had there. Price, reacted to it here, okay. We had another little smaller flip. Price got down beneath it, but it just was still underneath it, okay, still just hanging around. It didn't really get down beneath that 7,000 level before we moved away up to 10,000. And now, once again, we're back down. We've been back down towards around about that 8,000 level. Okay, so there's clearly significant area of demand, significant levels of support there, and so that starts to get us interested in, well, what can we do and what can we look at as trade opportunities. And as we looked there a little bit before on the 4-hour chart, well, I saw that there is a little bit of an inverse head and shoulders that's been building back. Now we're back at that sort of support level. We've had a break of the sort of the trend line, the channel, and once again we're back around about that 8,000 level. So what you've got there is a bit of a confluence of events occurring, and that becomes key for us. That becomes interesting. When I get a confluence of events occurring at one particular pace, where in this case we've had price action, head and shoulders reversal pattern with a break of a trend line at a significant level of support, which is also a big round number. Well, then that starts to become key for me. That starts to become of interest to me as a place where putting on a position for myself becomes a sort of a low risk opportunity, because I know my exits, I know where I'm getting out if my idea is wrong, but also I know where where the opportunity is for me to run to that trade. Clearly back towards that sort of 10,000 level would be of interest to me as an active trader. Let's say a longer term investor in Bitcoin may have a different view. So, as I said, I thought what we'd do is just drop in a couple of the charts of some of the major altcoins that are also available to be traded on Blackwell Global MT4 platform. This is Ripple, an interesting instrument, interesting vehicle. For a good deal of time, as you can see here, we really were in a very, very small range. Okay, price was batting around between about 10 to 25 cents. Okay, there was a little bit of a range there, but towards the sort of end of last year, we had almost like cryptomania, as Bitcoin raced to new highs. Well, it had a knock-on effect on many of the other altcoins, and we can see here that I remember vividly myself. It was sort of trading up from around about 25 to 45, and then we invariably got up to just above $3 there. Okay, price flew up there, and then really, as I said, what goes up must come down, and that's what we saw. And we saw a real significant fall away. Very much like Bitcoin, but once again, what we saw was that we moved down to down to our particular level, of which became a key and of real interest to us as traders. We can see there that that kind of particular area around about sort of the around about sort of 65, 65 cents, 70 cents has been of interest. A little bit like what we looked at Bitcoin for 8,000. We saw that actually sort of resistance became support. Became support here again. It was initially support before breaking down, but it's almost like it went underneath it to sort of build up a little bit of energy before it broke all the way back through, and started to nudge its way back up towards the one level, towards the one zone. And in the same way that Bitcoin rallied from 7,000 to 10,000, Ripple did pretty much the same, and Ripple itself has come back down towards that sort of 65 area, 65 cent, between 60 and 70, and that's an area to sort of keep an interest on. And this just gives us the impact that or the influence that you can use Bitcoin to basically also act almost as a little bit like a leading indicator for some of the other altcoins. They follow Bitcoin in a very close. Very closely correlated way, and that in itself can give us, a trading edge once we're able to understand that kind of relationship between them. So here's one of the other interesting altcoins, Ethereum, which is also available on the Blackwell Global MetaTrader 4 platform. Here we are. This is a monthly chart, and it's the reason we just put up there once again is just to show that. That kind of rally that we had there in the latter half of 2017 as the world went a little bit crazy for Bitcoin, that also had a knock-on effect to other of the major altcoins. If you look at the Blackwell Global cryptocurrency video series, that you will find that there are some excellent additional videos that go into the sort of crypto trading 101, but also give you some insight into the other alternative currencies. Ethereum is one that is many people would class as almost like the sort of the second cryptocurrency after Bitcoin, and it enjoys a degree of interest also as a commercial entity itself. So that becomes of use and interest to ourselves. You can see here that monthly chart is it rallied up and it fell away, and that's what we want to be able to sort of look at how we can utilize that, how we can build that into our own particular trading plan. So if just look at here on the daily chart, well, we've had this move. It looks very similar to Bitcoin. So then, as you said earlier, it's not really a surprise. Bitcoin is the big gorilla, and so where it goes, others will follow. There's a good deal of co-integration there with other of the altcoins, and price sort of has fallen back to from its highs of around about 1,400. We fell through the $1,000, and then really we've ended up back in the sort of around about that kind of zone, around about sort of 60-20, 60-30 as a zone there that we're looking at. And we can see drawing in that particular level of support and resistance becomes key for us, becomes very, very interesting. It becomes, what are we particularly looking at? We can see here that, as price fell down, it fell down towards around about the 400 area, just to remember, like in the same way that, in the same way that Ripple fell down, also in the way that Bitcoin came down to around about the 6,000, 7,000 area, we had back there, we had a little bit of reversal, and a move up, and that's what happened with Ethereum as well. We moved from about 400 to 800 there on Ethereum, that gave us a very nice swing, to be able to trade, and then we've drifted back, we've drifted back down to around about 60-30, 60-50, it's we'll be looking in that zone, and what I'm interested to see is is that now going to be our sort of a line in the sand, a good support level that actually provides us with the opportunity to move up. Those of you who might be looking at particular bigger trades, well, we might be sort of looking at, well, this might be saying, well, Paul, that to me looks like a left shoulder. That to me looks like a head pattern there, and maybe there is a right shoulder, okay, forming here, which would, give us maybe a sort of a neckline around here with a kind of, if price broke up and moved, that's what you'd be looking at. So, there are opportunities across all of the alt currencies, okay, the altcoins on the Blackwell global platform. And, by being able to analyze and trade Bitcoin, it actually also provides you with the skills and insight to be able to operate within the other Blackwell global cryptocurrency trading range. So there you go, ladies and gentlemen. I hope you found that useful. I hope you found that interesting in terms of insight into Bitcoin in particular and what we're looking at right this moment in terms of the trading opportunity and having a look at what the pros and cons are for Bitcoin. And also just to finish off there, to see how Bitcoin, has had an impact upon those major other altcoins, and how, the use of technical analysis, if you're coming from, an FX background or an equities background or an indices, commodities, is equally applicable to cryptocurrencies as it has been to your other asset classes. That should give you, a real sense of confidence and self-belief that with a little bit of education, a little bit of training, you should be able to operate within these fascinating and exciting markets. As always, I wish you the very best of success in your own trading, and I look forward to speaking to you soon. Trade well, ladies and gentlemen, and good trading.